Hi guys, welcome back to the channel. It's Ryan, the Degenerate Passive Income, coming to you like we do every Tuesday night, 7 p.m. Central Standard Time. Well, 7:08 tonight. We're a little late, guys. Sorry about that. But we come here and we talk about everything under the EMP umbrella. We answer all the hard questions. We deal with the FUD if there is any, which there usually isn't. But bring it on if there is, guys. We're here to answer. This is why we host these every single week, is to answer the hard questions. If you have we don't care what the question is. Call us idiots if you want. It does not matter to me or AJ. We have thick skin. We've been in this space a long time and things of that nature. So I just want to stress, guys, nowhere in the space will someone come on, especially the founder, will come on once a week and be like, okay, what do you guys want to know? No other team or protocol has doxed wallets where you can go to DBank and see where every single dollar is. People do not realize how special that is. And the people who don't are the ones that are getting wrecked. And obviously, Loom-X, they decided to start back up today with fresh money coming in. That's how they're paying out their investors. And it's a nightmare, guys, whatever. Everything else is crashing into space. We're going to talk about it all. So please, if you have questions, please ask them. Also, if you stick around to the end, I'm going to give away a shirt just like last week, guys. I got these Bernard Bond shirts printed up from our good buddy Scott Tixon from Utah. He is Best Blinds Utah in the chat, guys. Hit him up if you want some merch. Got the little code on the back. Someone scans that, it brings you right to the Bernard Bonds website. So that's pretty cool. If you want any kind of merch, ask him. He will get hats just like this, shirts, whatever you want. And he makes nothing on it, guys. So it's cheap. He does it the goodness of his heart. So thank you, Scott, for that. He'll probably pop in. I know he's on vacation. But with that said, guys, let's get started. We're going to hop into Bernard Bonds right away and discuss it. We've got some things to talk about. AJ, once again, thank you for taking time out of your busy schedule. I know that you got things to do, but it's important that we talk to our people every week, I think, and people appreciate it. So if you do appreciate it, guys, please like the video, put a thumbs up in the comment something where you're from. I don't care what it is. It helps the algorithm to get this stuff out there. And stuff like that. So AJ, thanks for joining. And how's it going this evening?
Yeah, Ryan, great, brother. Happy to be here, man. Again, another DeFi date night, and markets are looking pretty good. I know anytime the ETH is above 2K, I know you and I are both happy. We had some great green candles earlier in the week, and we'll talk about how that affects bonds and stuff like that in a minute. But overall, I think this is a great sign. Week after week after week, we come on here and discuss, and obviously you and I are both not very good at fortune telling, right? But we do know that we are bullish on ETH long term, and I think we're seeing, this slow move up now, and even just staying at these levels is a great sign. I mean, we've been at about 2,300 for more than 24 hours now, almost 48 hours. That is a good sign. Usually, what scares me is the pump and dump, right? Where we see ETH go up real high and then immediately get sold back down. The fact that we've been kind of holding at these levels is really bullish to me. Again, I think we're setting a higher highs, and that usually means that we start making an uptrend. And again, I mean, all this is throwing darts at a board, right? But we think that we're a lot closer to a bottom than we are a top. And yeah, I think over the next few months, we could really start to see a rally and then really get a bull run later this year, like we've all been hoping for. So
exactly, and that's like you said, when you see, these are 4-hour candles, guys, and when I see 5, 6, 7, 8 of those in a row, I get excited because, like AJ said, the pump and dump, and when you zoom in, guys, it doesn't look that great. Okay, it just looks sideways. You can't look at that. You can't. A 4-hour is the minimum, and you can go 24-hour. That's what I look at. Obviously, we saw the big, this is daily, obviously, guys. But look at this here, like 8 days in a row, 7 or 8 days in a row, this thing's going up, and that is an excellent sign for crypto. So I just want to get that out of the way, and that has effect on the price of our bonds, obviously, guys. Okay, as you can see, a bond right now is 43.57. I saw it as high as $45, so that's good. When ETH doubles or triples in the next, 9 months or however long it's going to take. We don't know what it's going to do, but just think the price of your bond triples and you're earning that much more APR every single day. And that's what Bernard Bonds is all about. It's about providing liquidity farming, liquidity providing, concentrated liquidity providing, ladies and gentlemen, on the DexFi vaults. This is Bernard Bonds, just a white label service of DexFi. Everybody knows this. And that's how we make money, with fees and volume and things of that nature. And there's nothing else like it in the space. I mean, everything else is gone. Everything else is, a Ponzi. There is zero Ponzi-nomics to this thing. It's just printing. And one thing you cannot deny is that it's paid out $1,387,837 in the last 9 months. There is no fudding that. It is all provable on the blockchain, because you can go right over here and click this magic little button, and everything is right here for you to see. The whole portfolio, okay? We've got 11,000 ETH on base sitting there for entries to get into if we see something juicy. And every single dollar is accounted for in these vaults, okay? It doesn't give away the secret sauce, doesn't give away the ranges, nothing like that. But every dollar is accounted for, and you cannot deny that. It's a beautiful thing, and it's transparent. And that's what we're shooting for, is 100% transparency. We don't do fake CEOs here, founders hiding behind a dashboard, bodyguards showing up at summits in Miami, face masks on, AI voices. We don't do that here, guys, okay? That's child's play. That's a joke. That stuff is garbage, and you know that. If you're in that, good for you. You're going to get wrecked, but whatever. If you click on transactions, everything is here for you to see. When people mint, when people redeem, when people claim, when they borrow for Aave. I'm going to talk about that. We're going to talk about that in a second. And everything, it's right here. When they deposit into vaults, okay? It's all right here, depositing into vaults. Every little transaction that goes through that wallet, and then there is only one, ladies and gentlemen, one wallet for DexFi, it is tracked right here. So you cannot hide it. You cannot FUD it. It is all right here. And what I want to talk about, AJ, because people are still wondering a little bit about the Aave position. Can you explain a little bit about what Aave is and how it's benefiting us? It looks like we've got like $625,000 in.
Yeah, no doubt, Ryan. So, and this is a great way to highlight this week specifically, because ETH has been on a run, right? So the Aave strategy is really, really cool. And again, it's what all the big guys use. And I like to use the word smart money a lot, but it's what smart money does, right? So basically what it means is you're actually able to borrow against your position to then earn without necessarily putting your capital at risk. And number two, without losing the upside potential, which is the most important, right? So in this particular instance, our Aave strategy, we have 475 ETH roughly in Aave. And if you even just saw last week, with ETH being around 2K or a little bit less over the last 2 weeks, really, we sold that value only at about 650 K, 700K, right? Well, now, because we still own that ETH technically, that position is worth $1.1 million now, and that is simply because the price of ETH has gone up, right? So it's a way that we're not liquidating our ETH exposure, because the other way of doing this, and which we were doing when the fund was a little bit smaller, because we were prioritizing yield a little more. Now we're prioritizing wealth preservation. And again, that's all generally speaking. We it's not an exact science, but the whole point is that we would put that ETH into LP positions, and now technically we only have half the ETH that we put in, because the other half in any liquidity position is in the other token itself. So in other words, when you're providing LP, usually half of it is Ethereum or whatever the native asset is of the chain, or USDC if it's a stable asset. But we really don't like providing LP, some alpha. We don't really like providing LP on stables, because that really help increases impermanent loss. So if you have a stable asset and a volatile asset, so say USDC ETH, you get hit with impermanent loss a lot more. If you do, Bitcoin ETH or Banker ETH or EDL ETH, like all these other tokens with ETH, both of those are a little more what we call correlated assets, so they move up and down together. At least in a better ratio than stable assets. So again, sorry, I went down a little bit of a rabbit hole there, but the whole point is that we're not actually selling our ETH to get into the LPs. We're borrowing against it, borrowing USDC, and then using that USDC to buy into the LPs. And what this does is just way more capital efficiency. It gives us the upside on ETH, and again, only borrowing $470,000. When ETH doubles from here, now we have $2 million of value, and only have borrowed 400 or 500K. Again, by then we may have borrowed more, but the whole point is that it still gives us all the upside when ETH does run. And so this is really bullish because the last part of this is we can then use, right now we're using a lot of the yield from the LPs to compound, which helps, obviously build value as well. But what we can do, whether we get in trouble, meaning, the price of ETH goes down dramatically from here, or whether we just want to start paying down some of the debt, we can start doing that with the yield. And so now we're paying back a loan with the yield, right? So it's a self-paying loan essentially. When now that really increases the bond ratio and ETH price, because now we have almost by that point $2 million, or 500 ETH, without anything borrowed against it. So there's so many different ways that we can again have capital efficiency doing it this way, and there's very little downside. Now again, I say that with a an underlined or italicized note, but when I say little downside means we're not actually leveraged, or we would never get liquidated even if ETH went down by half. Our loan to value ratio, that number right there, 1.92. We usually keep it, around two, a little bit higher, a little bit lower. That means that the price of ETH can drop by half, and you'd still be safe. And even if we did get in trouble, it doesn't work like leverage positions where you lose your principal. If you get in trouble, it just slowly pays the loan back with the difference, right? So it's not, it just doesn't disappear overnight. And again, we could always just liquidate LPs to pay that back in an emergency situation. So it's very, very safe. And Aave has literally billions of dollars, or $1 billion in value. So I hope that it doesn't ever get hacked. If it did, crypto would be in a lot more trouble than just our bonds. So all that is bullish for me. So yeah, does that help explain the
Yeah.
Aave strategy, Ryan?
Yeah,
Okay,
for sure. Yeah, no, I get it. I get the question a lot, so I just want to touch base on it because this is what we're here for, guys. If people
sure.
didn't know what Aave is, and why do we have 474 ETH? Why isn't that going into the big question is why isn't that going into Banker or Render or Tau or things of that nature? Something that's gonna maybe make us a little better percentage. You know what I mean? And but like you said, you're borrowing against your ETH. And you're getting the upside because you're holding the ETH. I mean, that's kind of the whole point of it, right?
Yeah, no doubt. And to your point, I mean, yeah, there is definitely an argument to be made that we're losing a little bit of APR, or at least the being able to put that capital to work. But it is a bit of diversification too, right? Because we Banker or Tau or Pendle or any of these blue chips that we are in, they could go down too, right? So it is a double-edged sword, both up or down. And the fact that we're borrowing the USDC to go in, we are still putting that capital to work. It's just a matter of doing it in a way that we're not actually having to liquidate our ETH. So it does actually, in the long term, it makes a huge difference. Again, by especially now, like the other reason that, and again, just one more point I want to make. The other reason that we didn't really do this Aave strategy, um, is that this doesn't work well when the market is going down, right? So again, if we would have done this at $4,000 ETH, now we're borrowing against our ETH, and now ETH is crashing. We're fighting this battle of being in trouble because now we're borrowing against an asset that's going down. However, now that we feel that we are closer to a bottom, and even if you're not, an ETH maxi like Ryan and I would say that most people don't think ETH is gonna go, below $1,500, or maybe even in an absolute worst case scenario, 14 or 12. And if you do think that, then bonds or crypto in general is not not something you should be doing anyway. But um, being this low and borrowing against ETH at the lows, it makes it way more beneficial in the long term. So and a lot less risk, like I was saying earlier, to the downside, because now you're borrowing against a price appreciating asset, and it makes the whole system, the Aave strategy, way better. So
Right. Yeah. So I mean that's an excellent explanation. It may seem long-winded to some of you guys, but like I said before, this is why we're here to explain things like that, because we get the crazy questions when we're not live, and then it's super hard to explain in text and in the groups, because then there could be more questions, and then things get jumbled, guys. So thank you for that, AJ. I mean, it's just I get it. I hope everyone else does. So we'll continue on with Bernard Bonds. We already talked about the USD distributed, guys. It's about $45,000 a month. If you guys know anything else that's 100% doxed, owners and wallets that are paying that out, that's has no referral link and no Ponzi nomics behind it, let me know in the comments, because I'm in. I need to be in things like that. Okay. As far as I know, there's nothing like that out in space. And don't come up with this other garbage I've done videos on, guys. I mean, people are still trying to shill that garbage to me. And I mean, even owners of that stuff, they see my videos and they're like, you should really come on board and whatever. And, now they've got, I don't know what they paid. I'm not going to mention any names, but I don't know what they paid some of these YouTubers. We got some big YouTubers out there that are shilling it now, like Aurum and things of that nature. And they must have paid them a fortune, because usually they don't shill any junk, but I don't know. That's just me, guys. But anyways, the point is it's zero Ponzi-nomics, okay? It's 100% transparent. The CEOs are doxed. Everything is doxed. The wallet's doxed. You can't hide the money. And it's all right here. As you can see, the current fund value, this went over 3 million for a little bit, because obviously this changes with our assets, guys, with the ETH and whatever coins we hold in the pairs, right? We've got 16,104 Bernard Bonds minted. Remember 9 months ago, I remember for the first month and a half of this, I got so many hate DMs saying, you only have 150 bonds. This thing's going nowhere. Well, you know what, guys? Look at us now. That's all I have to say. And you guys know who you are out there. So total bonds minted, we hold 23% of the total bonds, which is 67,535. Obviously, the DexFi treasury bonds, guys. Okay, and the daily compound, the daily profit, it is down because of the what would you call it? The volume is down, guys. Okay, the volume isn't crazy, and I'll have AJ talk about that as well. The price of the bonds have been holding up pretty well, 43.018 ETH, which is down just a hair. Maybe we should start with that, AJ. Let's talk about the daily compound, the profit being down a little bit, and the price of the bonds.
yeah, absolutely, Ryan. So again, we did a bit of a deep dive on this for the last week AMA, with what bonds actually are, right? So bonds are a yielding product, meaning you are prioritizing yield over just holding an asset in your wallet and hoping that the market goes up, right? So I want to first just say we got to compare apples to apples and oranges to oranges, right? So that being said, this is a true passive income yielding protocol that allows you to have this cash flow, right? So that I think is what we just need to preface things with. And regardless of whether you're up or down on your principal balance, the yield will outweigh everything, right? So even if you're down dramatically, which again is the only kind of FUD that we end up getting, and that's because whether it is a bit of an permanent loss or the fact that ETH is down basically half from some of the early minting costs, all those things. None of that even really matters. Obviously, in the short term, it does, and it sucks to see your principal balance go down. But none of that matters when you factor in the APR, right? Because even at a conservative APR, um, even if you're underwater in your principal balance, you're able to make up the difference through the yield within about a year. I mean, even at these levels, even if you bought the absolute highest price in both ETH and USDC terms of bonds, if you're doing 60% APR, you basically your position is protected in about a year anyway, and that doesn't include compounding and everything else. And if you're in for longer than a year, now you're up in principal balance and you're earning every single day, in some cases every second, depending on how big your bag is, from the yield itself. So, you know, if you bought, 9 months ago and you never compounded or DCA'd and only withdrew, then yeah, there's definitely an argument to be made of, you may not be as happy as others. But if you were doing that and had you held that ETH in your wallet, you would still be down or at least have opportunity cost of just having it sit there, and not earning anything. So yeah, that's kind of my little speech on what bonds actually are. But in terms of yield, we're going to be rolling out some better metrics. I know both Fusion Watch, shout out to Grover and John, as well as our own UI. Fusion Watch again is going to be doing a whole new redesign of the website, and we're going to be implementing some metrics of our own on Bernard bonds and DexFi bonds, right here, the screen you're looking at right now. And so even though APR has been down a bit this week, and volume has been down, like you said, Ryan, we typically run anywhere between 2,000 to $3,000 a day in on the low end. Now we're about 1,000 a day, but it's only been the last few days. That should end up coming up again as we do get more volume in the ecosystem. And the big ones have been kind of Banker and Tibber and REI. Some of those, the volume has just been down dramatically on those, and at one point they were doing 2-3% a day in yield. So it is all cyclical. I'm not worried about any of that at all. Everything is still fundamentally extremely solid, and we have amazing positions too, meaning we have built our bags at the lows. We're in profit on literally all of those vaults I just mentioned. And then when the volume does return, now we're printing again, um, and APR and bond price recovers really quickly. But overall, it's still been bullish. I mean, we'll show it on the UI, and I know you've done some of the math on your own, Ryan. But the average APR is still even higher than what it is right at this moment. So
Mhm.
it's been about 62% APR. So even though we're in the 40s now, that doesn't mean, again, that is just for this particular week. The APR that's displayed is what is the current true APR at this given moment based on yield and based on the NFT price, right? The bond price. And another really, misleading factor that we've talked about before is when ETH has a dramatic run, whether it's up or down, it does kind of artificially alter the metrics, right? So when ETH really goes up and everything else is kind of only going up a little bit or staying flat, that will, definitely affect the APR, making it a bit lower and making the bond price in terms of ETH a little bit lower, even though the dollar value of bonds is up, right? So
Mhm.
there's so many different variables at play. But overall, if you just zoom out and take a multiple week average, things are still really, really healthy. And if you look at things over the whole year, you can't argue, Ryan, that we're at almost $1.4 million paid out in 9 months. I mean, that,
Exactly.
that is just the proof in the pudding. So, yeah, those are all the kind of points I want to make. And again, we will see that ETH ratio that should also start coming up too when um the yield increases because now we're compounding more as well, right? I mean, as again that split gets bigger, now we're actually buying back into positions thousands of dollars a week or more, and that will push the ETH ratio up again as well. And there's also some other factors, as people exit, that 10% that exit fee stays in the fund, that will also push the ETH ratio up. So there's a whole bunch of things at play. And just to kind of end on this, Ryan, maybe you can comment on this. What I see a lot, especially this week, is um, people they wait and to buy to get confirmation that the market is recovering when
Mhm.
really the millionaires are made when things are low, right? I mean, I still think people don't understand that. So I don't know. Is that your experience? I'm sure it is.
I mean,
Right? Yeah,
yeah, both me and you have bought the top and and
for
sold
sure.
the low. I mean, that's just human nature, guys. And I was on a Zoom today with a group from Australia. About they had a bunch of questions on Bernard bonds, and I was an hour long Zoom, spent some time with them. And I have another one for the group from I think Turkey maybe. That's tomorrow. That's going to be another group of people, and they're like they want to know what the protocol. They've watched our lives, and they want to talk to somebody, right? And they can't make these because it's in the middle of the night or whatever. And
For sure.
and that's what I've told them. Like, guys, I don't want to tell you what to do, and I'm not going to try sell you on anything. I said, all as I know is that this amount right here, $6,700, I'm making about 50% APR, no matter what any of this stuff says up here. Okay. I'm making that APR on this amount of money. And I said, if you guys have something you're getting better than 50% APR on, you have to let me know, because like I said as well, I need to be into things like that. And they're like, no. I said, this is what we're looking for, something stable. And I showed them the D bank. I showed them this. And like, well, we're getting ready to buy some ETH and, maybe try this out in a big group of us. I'm like, well, I don't, I don't know, but probably now is the time to buy it. We might have a dip coming up, but you guys do you. But yeah, like you said, like I said, we've bought the top and sold the low. It's just human nature. People want to see it run. Well, it's been 9 going on 10 months, guys. I don't know how, you can't FUD this number. I mean, that's real world stuff. $1.4 million paid out, and it's all real. It's all right in front of you. And so is the owner. So I don't know what else to say about that. But if I'm a beginner, the only thing I want to know is how much it costs, which is right there, and what am I going to make? So say I put $6,700 in worth of bonds. I'm making 50% on that. Okay. So 155 bonds at 50%. And then a lot of people ask me for this link too. 155 bonds at 50%. It makes me $8.50 a day, $255 a month. Okay. Very simple. If you guys don't have that link, I'll pin it in the comments here. It's very, you should have that, okay? Because it factors in everything. That's your calculator and things of that nature. So this makes me $8.50 a day on this money, which is better than, I did a video. I'm sure you guys probably saw it. It's about my real estate, okay? Where how many bonds I would need, how many bonds I had in my other wallet makes me, how many bonds I would need to make $3,000 a month net. And it was like 1,875 bonds, about 75 grand worth. Well, I need 6 of my rental houses to do that, to net 500 a month. And that's a whole bunch of work. That's a whole bunch of tenants, a whole bunch of toilets, and a whole bunch of maintenance. Then the argument came up in the chats. Well, yeah, but your value's appreciating. Well, hopefully, but the renter's wrecking it every single day. You're hoping it goes up, but you know what else is going up? Property taxes, insurance, maintenance, everything else is following more than more, okay? And you can only charge so much rent. And I told the guy, online, I read it in the chats, guys, you can go look. I think it was in the AIntuition chat or whatever. I said, hey, I'm more than happy to open up my real estate portfolio and let's compare numbers, because he said he was in real estate as well with property managers, so it's 100% passive. To me, I don't think there is 100% passive real estate because you're always involved. And if you're not involved, you're getting stolen from, period. So I just wanted to touch on that. I probably went on a little bit of a rant, but I just want to say, guys, that I need 5 or 6 rental houses making $500 to $600 a month to make $3,000 a month, or $100 a day, or $75,000 of the bonds at this price to make the same thing, and I do nothing. Okay, and you're buying at the low, and ETH is going to rise, in my opinion, double or a triple the next 9 months or whatever it's going to be, and I just think it's the right time. Not financial advice, but it's the right time. I'm not sure what you think of that, AJ, but.
Yeah, no doubt, Ryan. I mean, again, man, I think that was a great comparison, right, or analogy. And again, all the fudsters, they wanna nitpick, down to the penny, right? But overall, what we're saying is, yes, there's definitely a different risk tolerance. Yes, it is, again, like I was saying earlier, a bit of apples to oranges. But to your point, Ryan, I mean, there are so many more expenses that come along with real estate: the headaches, the time, the effort, the stress, and yeah, I mean, you again, the variables as well, right? Like, the neighbor's house can blow up, the tenant can pour, concrete down your sink. I mean, who knows what the outcome may be? And again, Ryan and I both are very bullish on commercial real estate. We've both been in the game, but you can't argue with how. And again, it says it right on the website, right? The easy button of yield farming. I mean, bonds are absolutely the easy button of cash flow. And again, even if you are skeptical on bonds or the long term price of principal or whatever it might be, then use the cash flow that it generates every day to just buy more Ethereum or Bitcoin. And again, have a nest egg in that regard, or use another flywheel. How about this for a flywheel, Ryan? You put money into bonds, and then you withdraw the USDC to put a down payment on a rental property, right? So there's 10 different ways to utilize this to what feels right for you. And Ryan and myself are not here to tell you what is right and wrong. We're not financial advisors. We never ever tell you to get involved in a protocol. You're the one that's pressing the buttons at the end of the day, right? We're just here to explain every week on what's actually happening and show you that the on-chain, irrefutable proof of what is happening, right? Because a lot of these other protocols that Ryan mentioned earlier, they're just numbers on a website, right? That $1.4 million could just be coded on the back end, right? Well, no, not in our case. You can literally go to DBank, a third party independent on chain it's basically a way to read the on-chain data in an easier way than looking at base scan or eScan or any of the scanner sites and do the math. I mean, again, you can literally see every transaction for the last 9 months, and it'll add up to the penny of 1.3 87 million. So yeah, I think again, all that is really a confidence booster, for everybody that is excited about bonds, and it's what we've been doing, right? We say this all the time. Uh, the underlying technology with the vaults, we've been doing this for 4+ years, with EMP and DexFi and our own treasuries, and we built this product, especially vaults, out of necessity of our own. And bonds just came around as again a way to let people earn through LP providing without necessarily having to do it themselves. So again, I think we've proven that it is viable, and that's all. Again, last point I'm going to say, all of what I just said over the last 9 months was with the market going down only. So imagine what happens when the market does go up and we get a bull run and we get an alt season and we get everything that we hope for. And that's kind of how this whole conversation started. Don't get into bonds when everybody is FOMOing in and ETH is 8 grand and your grandma is asking about how to buy bonds. You want to buy bonds now when the market is low, the fear and greed index is low. Everybody hates crypto right now. Those are the times to accumulate an asset. So again, not financial advice.
Yeah, exactly. Yeah, accumulate now, not when everyone is. But that's human nature, like I said before. Buying the top and selling the lows.
Yep.
I get it, but like AJ said before, this is when millionaires are made. And in my opinion, I mean, that's I'm buying more bonds this week. And I'll do it live. I plan on buying a whole bunch. So maybe we'll do that. I'll have a live or maybe I'll do it live next Tuesday night. We'll see what happens, guys. But regardless, let's take a few questions, AJ. I think Pulse Debater is maybe talking about the whole Aave thing. Maybe you could put some of that ETH into L stake when it commences. I'm assuming that's what he's talking about.
Yeah, so shout out to Pulse Debater. Yeah, I mean, we definitely do a little bit of asset allocation to our own tokens, right? We have a little bit of GDEX, we have a little bit of eShare, we have a little bit of Plasm, but we don't want to go too crazy in terms of allocating those assets in terms of the bonds, unless they're paying. So again, we prioritize yield over a self. You know, uh, uh, basically a self-fulfilling action, right? Because yeah, it'd be great to have 100 grand. We just go buy eShare with 100 grand, but that wouldn't be responsible, and ultimately it wouldn't help the protocol, or it wouldn't help bonds yield. So if we do L stake, or eShare or GDEX or any of the tokens, it would only be that way if we are actually earning competitively on the LP, right? So, and sometimes it has been. I mean, GDEX and eShare have been paying great, rewards when the volume is up. So that's why we do have some exposure to them in the fund. And again, you can look and see for yourself on all this. But that being said, you got to remember Pulse Beta, right? So LStake is utilizing bonds on the back end itself. So even though we're not actually going to allocate, and we may, I mean, again, never say never, right? But even though we're not actually allocating to LStake, Bernard bonds and DexFi bonds feed LStake, and specifically Bernard bonds. All the LStake yield is going to be under Bernard bonds. So that is bullish, and the more TVL that it brings, I don't know the exact numbers, but I think it's probably around 50 or 80 grand of new buying pressure when LStake launches. on bonds, so that goes right into bonds. All these things help the ecosystem, no matter what it is, whether it's eShare, Plasm, GDEX, or LStake. It's all part of what we call the mothership or umbrella or whatever we want to say, and that we benefit from the economic energy, from all that. So
Yeah.
hopefully that
And I
answers
think
your
the magic number on that, AJ, from what I heard from Grover, I think it's six. So it's the second that L Stake launches, hopefully in less than 2 weeks. I think it's $65,000 worth of bonds will be bought instantly. So that's
okay.
bullish. That's, I don't know how many bonds that is, but that's a lot. It's over 1,000. 60. What do they say? They're $45. 65,000 divided by 45. That's 14 to 1,500 bonds instantly. I mean, that's crazy. And yeah, I mean, I'm excited for L-Stake as well. I know a lot of people are. We'll talk about that when we start talking about Plasm. Moving on, Cool Sheet is here. He's a Plasm junkie, just like myself. He's waiting for $1 Plasm. Boy, I hope so. I tell you what, Cool Sheet, I'm going to send you a bonus in November when my 5th stake is up. If we have $1 Plasm, I'm going to be able to really afford to send you something. It'll be more than a t-shirt, I'll tell you that. So we'll go from there. Marvin, I just realized I sent you the wrong address. Oh boy. Well, Marvin, I sent that shirt out on Thursday. So if it's not there by Friday, I'm assuming it's coming back to me, and I'll have to send it out again. So I don't know what to tell you there. I'll have to wait till it gets sent back to me. But sorry about that. Motley says, let's say ETH is at 5K. What would the bond price be? Do you think it will go back to 250 a bond? So that's less than a double.
Yeah, that's a great question, Motley. So yeah, no doubt, Ryan. So like you said, that's less than a double, but let's just do some quick math. So, and again, I think this is also good to clarify. So, if ETH doubles tomorrow, that means that the ETH ratio would be probably around the same at that, 0.0, say 2 ETH, and which would put the bond price at roughly $80. So it wouldn't go to 250, on a double like that. But what people don't realize is, and there was another question like this last week, and with a little bit more FUD to it, but I know Muttley's been here a long time, so I want to explain this best I can. The whole idea is that when ETH doubles, that alts run harder, right? So we always hear this term alt season, and when ETH starts running, and actually sustains, again, we're not really seeing that happen right now because ETH is running first. But when ETH does run first and then sustains, that money triggers what's called an alt season, and then that the profits flow down into the smaller cap alts or other tokens that we have exposure to. So it's not a one-to-one, equation of if ETH doubles, bonds double. In USD value, that's true, but in terms of ETH ratio and then the actual dollar value, it could be a lot more. Meaning, ETH doubles, but Banker and REI and Tibber and all these other tokens that we have exposure to, they 3 or 4x, in that same amount of time or shortly thereafter, and that's what puts bond price, back to 250 per bond. So again, and obviously nothing I'm saying is guaranteed. It is still all variable, 100%. But again, there's a lot more to it than just being able to answer if ETH goes to X, then what is the price, and there's also a lot of other crazy factors that we said earlier. If ETH doubles, that means that there would be a lot more volume in the market, and so now we're doing 5-10 grand a day, if not more, in compounding, and so that alone also pushes the ETH ratio up as well, because we have a lot more volume and a lot more fees raising the floor price of bonds. So
Mhm.
hopefully that answers. But again, the takeaway there is, you know, if you bought bonds at the absolute top of ETH ratio and dollar value, um, all of that will be alleviated by being in bonds longer, right? What you don't want to do, again, not financial advice, but the worst thing to do is have bought bonds, the first week, only withdrawn the entire time since day one, and then redeem your bonds, at 0.018 ETH. That would be the worst thing that you could do in terms of, at least in terms of asset value. So yeah.
Exactly. Yeah. So if I'm a new user, I'm looking at three things. I'm looking at what it costs. It's ETH on base, guys, to mint. What it's going to make me. Here's just a quick example: 155 bonds. I'm making 49.64% on this amount because that's what those bonds are worth at this price. Also, I'm saying, your money's never held. You can redeem your bond. You can buy one second. The next second, you can sell it, guys. Okay. Your money's never held in case you need it for emergency. But there's the 10% tax. It doesn't go to me. It doesn't go to AJ. It stays in the protocol working for the rest of us. All right. So, but my advice is don't come into bonds if you don't have a long-term mindset. Please go into something else. Go pay bills off or something. If you don't have a long-term mindset, this is get rich slow. Okay. The get rich quick thing in crypto, it's over, guys. It's done. There's no such thing anymore. Okay. It's get rich slow. And if that takes 2 years, 3 years, I don't care. I have time. I'm never going to sell a bond because you'll notice during this stream, this thing's went up over 50 cents since we've been on stream. I've made 50 cents by talking to you guys online, and my other wallets, which has like 1,500 bonds in, has probably made a couple bucks. All right. So I just saying that if I'm a new user, those are the things I'm looking at. 100% transparency. You can sell anytime, and you're making a killer APR. Okay, so I think we've gone over that. What we got? Muttley says crystal clear. IMC Panic says show P&L. Okay, right here. IMC Panic likes to see everything. He's kind of a little fudster. That's fine. There it is, right there. I'm down 32.3%. Because I am one of those people who bought the top at $275. Okay, right there. I bought 9.9 ETH. I spent 25 grand, and I minted 114 bonds. So I'm down $8,000. I've taken in 10,130 USDC. IMC Panic, why don't you, and these are realized profit because I've taken that USDC. So IMC, I want you to show me your 401k. You're going to say, you know what? I made 23% of my 401k last year. No, you didn't. Did you sell any of those stocks? You sell any of those bonds? No. You didn't make nothing because that is not realized profit. I rest my case. So that's that, guys.
Yeah. Yeah, no doubt, Ryan. And again, I mean, we have nothing to hide here. Obviously, we wish the P&L would be better. But that being said, Ryan, and again, you can go to the chart and look. ETH was about $4,200, I think, if not even a little more around that time. And so you would be down 50%, not 32%, even just holding ETH in your wallet. So that's another thing. Again, people just don't want to give credit where credit is due, and it's fine. I mean, again, we're here to discuss every week and look at different things. But and the last point, just on that too, Ryan, while you're going through this, that is within 9 months, right? So even with the P&L being down like that, if we look at that in another 9 months. I'm not a betting man. I know Ryan is, but I would bet that we absolutely see, at least a double-digit profit in the P&L within the next, 6 to 9 months. even in this position that Ryan is showing. So yeah, it's just a matter of being in bonds long enough to make up the difference, even if you did get involved literally at the absolute top. So
Yeah, and honestly, guys, IMC Panic, maybe you should try this. I don't look at this P&L ever because you know what? I don't care about it. I know that I'm in bonds for the long run. I know that it's going to sit there and earn me USDC until the day I'm in the grave. I could care less. I could take that USDC out with no fees anytime I want. And I know that my P&L is going to be up within, like AJ said, the next year. So I could give a crap less what this P&L says to me because I'm not going anywhere. You might have the mindset. You're one of those people. I need to get my money back, 5% a day, 7% a day. I need to get my money back in 30, 60, 90 days. Do something else, okay? Just saying, like it's not, those times are gone, okay? If you're not in something, if you don't want to be in something for a year, 6 months, a year, this isn't for you. I'm just saying, I'm not trying to try to get you guys into bonds, okay? And I'm not trying to get you into bonds. I'm just saying this is what I'm doing. I don't care what the P&L says. I knew going in that I was buying at the top, okay? I didn't have any. Yes, I had ETH. I have plenty of $900 ETH on my ledger. That is not being touched for these kind of plays, okay? That is stuff that I have bought a long time ago, and it just sits there. I know AJ is the same way. I think I paid
for sure.
I think I paid like $3,200 for the ETH that I have in there or something like that. I can't remember what it was, but it was enough, right? And that's why my P&L is down. It doesn't matter to me. I don't look at it. It's just like I don't look at my Plasm stake. And maybe we should talk about that next because we had all kinds of stuff, all kinds of discussions in Plasm this week, AJ. And maybe we should address that right away. Like there was some FUD going on. There was some things going on. There was like, and I think I just got sick of it. I just kind of clicked off. And people get emotional when ETH is $1,900. Okay, and when they're over invested. All right, and that's what a lot of people.
For sure.
And maybe IMC Panic's one of those people. He's over invested here. He doesn't want to sell his bonds. I mean, whatever. I'm sorry if you are. I'm not. I don't feel. I'm very comfortable with the over 2,000 bonds that I have. Very comfortable with it. So. Let's talk about Plasm, AJ. Obviously, everyone knows my position on that. So should we talk about what was happening in the group a little bit first, AJ, with Plasm?
Yeah, no doubt, Ryan. So again, hopefully we did everything we needed to with bonds. If there are more questions at the end, let me know. But yeah, Plasm has been continuing to perform. I think we still just get some people that number one just never fully understood Plasm to begin with, or number two, what you said earlier, Ryan, is so true. It's get rich slow, right? Everybody in crypto is so used to get rich quick, whether it's bonds or Plasm or whatever the ecosystem might be, or trying to go to the casino and speculate on the soul memes and lose your money anyway. The crypto just needs a lot of maturing in that regard. However, once you really wrap your head around what we built with Plasm, in my opinion, it's literally impossible to be negative because we have fixed so many of the potential downsides in crypto, period. And so that being said, yeah, well, it's about building ownership in the protocol. And so when you can kind of train your mind to go from I'm at a loss, or what I put in right now I'm down, and train your mind into how much can I earn or how much can I accumulate, and have ownership of a fixed deflationary supply token. That is where the math really comes into play. So yeah, what we we're going to explain kind of tonight was a couple of things. So number one, everything in the protocol is based on shares, and shares are different than eShare or ownership. What shares are, and that's what's shown right there in the middle, Ryan. Your ownership right now is calculated at about 5% or 5.4%. And that's because you have, what is that? Uh, 759 million shares. And so shares are essentially a way to determine how much of the new plasm you receive, right? So every day there is about 85 or 87,000 plasm that is released. And if you're staking and you have shares, you get part of those, emissions. And again, when we say emissions, it's like Bitcoin, right? So Bitcoin doesn't mint new tokens. You just earn more Bitcoin of the 21 million supply. And now, with Bitcoin where it is, that last million Bitcoin to be mined is only going to be mined over like 100 years, right? So
Mhm.
that's the same sort of thing with Plasm. As time goes on, you're getting less and less, new Plasm entering the ecosystem. And that's why the true ownership, which we talked about last week, if you can own about 600,000 tokens, Plasm tokens, that is about 1% ownership. Again, as a good estimate between the burning and the emissions over the next 1 or 2 years. So in reality, it may even be less than that, but that's a great number to shoot for. So in Ryan's case, a few weeks ago, you went in heavy. You put in 128K of Plasm, and you've already earned about 60K of Plasm from staking. So the whole goal is that you want to accumulate. So rather than saying, I don't want to pay the contribution fees. Is it better to buy on the market and hold, XYZ? The real question that everybody needs to ask in Plasm is, how can I get the most Plasm tokens for the least amount of price? And the answer is probably a mix of both. So what you would do is when there is a big sell off, or like Ryan says, when the Jeets Jeet, right? That would be
Yep.
a great opportunity to buy Plasm off the market, or simply just not sell your Plasm to go into easy mode, or contribute to the contribution costs. And number two would be going in with fresh capital. So 99% of the time, it's always a better deal to go in with fresh capital, like you did, Ryan, putting up, about 12 grand, into the contribution costs to earn over the next, 70 days or whatever it ends up being. So, and we saw the math. So, based on the share rate, and remember, when somebody's stake comes due, the shares are burned. So then, Ryan, now you'll see your ownership go up. You towards the end of your maturity, you'll actually start owning even more Plasm as well, which is another thing I think people are missing. We had uh, some discussion on that. How do I earn? Ryan, it's been 2 weeks and you've only earned 6,000 Plasm or 60,000 Plasm. How are you going to get to almost 700, which was what the estimation was?
Yep.
And the short answer to that is, as shares go away, you're earning even more. So it's not a linear, result. So, and yeah, by the time this is over with, Ryan, in this cycle, for you, cycle three, even if the price stays exactly the same as it is today, you will be in profit, because now you have, about 500,000 more Plasm tokens that you've earned, right? So hopefully that explains. I don't know. Again, it sounds a lot more complicated than it is, but hopefully that helped explain it a little bit better.
Yeah, well, I think the real question was the one person, DM me and said, "Hey, you staked 128,000 Plasm. It says you're supposed to get 600 to 650,000 Plasm, but he did the math on his own from the last live and said you'd be lucky if you get 400,000 Plasm by the time that's done because I've done the math of what you make daily, and so
Yeah.
but these are all estimates, guys. Okay, it depends on the market. What do those numbers depend on, AJ?
Yeah, so the numbers really depend on the actual new user. So let's go look. If you go to this is a perfect example. Yeah, go to stats and go to Fusion Watch. Right there and yep up. It'll take you. Yep, perfect. All right. So now if you look at this and go down a little bit, Ryan, you see the supply really nothing starts coming out or is very low right there, the daily plasma release. Yeah, until what is that, day two? Yeah, 214,
Two,
216.
yeah, two,
Yeah,
yeah.
yeah, and even before that, day what is that, 173, we see a big spike right there. That's even sooner. But you have to remember, so what matters is when that happens, these shares are burned. So your ownership goes up because you've locked in for the full 77 days, right? So
Mhm.
that really is the number one factor is the participation in the protocol. So and it could go the other way where say there's a lot of new users that come in and start staking, they're gonna dilute your shares, right, Ryan? So that
Yeah.
is kind of a bummer. But what's cool about that is if we have a bunch of new users to dilute your shares, they have to buy the plasm to begin with, right? So now it pushes the price up, and even though you're getting less tokens, now your tokens are worth way more. So that again is a really cool give and take of the way the system's designed to reward you. And so again, it all boils down to accumulation. It's not really a matter of you know min maxing every single aspect. It's about what makes sense for you to where you can own as many Plasm tokens. Don't even worry about the price. The only time price should matter is, getting the best deal on your tokens and getting them for the cheapest. And then in a year from now or whatever it might be, then you can worry about taking profit and do it in a way that is incredibly sustainable, right? Because in your case, Ryan, say over the next 4 or 5 cycles, you end up with a million plasm. You can sell $200-300 a day of that position, and never even move the chart because the buy and burn, right? By then it could be $2,000-3,000 a day buying and burning plasm, and if you're only selling $200-300 because you want to not only be respectful of the protocol, but you understand that it's about the daily yield. The price could go up while you're still selling every day, and so that is so cool because the buy and burn is really all that matters. As long as there is uh, uh, money that is used to buy and burn without depleting the treasury, then mathematically speaking, the protocol and the price of Plasm can only go up. And people think I'm crazy when I say that, but it's mathematically true because yeah, at some point there is also um, a tipping point where the daily emissions are even less than what the buy and burn does. And when that happens, that's when the true magic will really be shown because now, the buy and burn is 2-3 grand a day. And even when the tokens do release, it's only 1 or 2 grand a day. And then, then it gets real interesting from there. And all of you that have been accumulating now are gonna, reap the rewards of that. So
Right. And I also want to, while we're on this subject too, I don't want to forget, I know every single one of these people in the top 5 guys. I'm right here at number 2. This guy, good friend of mine. This guy, number 3, good friend of mine. And the guy, number 5, good friend of mine. These people are not selling, and they're going in with fresh ETH when their stakes are up. So for you guys worried about people dumping on your heads, between these 5, it's like 40% of the protocol, guys. Okay, so I'm just saying, like, we are not selling and dumping on your heads. So if you're worried about a lot of people say it's a whales game. It's not a whales game. This is anybody's game. Okay, for sure. Yeah, sure. Whales can make more money, but that's the same thing in the stock market. That's the same thing in buying gold and silver. It's how much money you have to put in and willing to risk, right? I mean, that's just part of life. So,
Totally.
but don't be panicked about these top 5 selling, because I know every single one of them, guys. Okay, so I just want to get that out there.
Yeah, and on that note, Ryan, you're 100% right. I mean, it's all proportional based on percentages, right? So whales do not have an advantage, or are not able to make more in terms of percentage. It's just simply that they have more capital in the system, and so therefore, dollar for dollar, they're earning more. But a minnow can get involved no matter what. And that kind of goes into one of the other questions I see here from Mechanic. He asks, is easy mode profitable? And yeah, the answer is yes. I mean, if we go back to easy mode real quick, Ryan,
Oh yeah.
yeah, even if you are, as long as, go to earn and go to easy mode, as long as that number is green. So right now it's 30% roughly, whether you're doing easy mode or staking manually. The short answer is, as long as that number is green, that yes, easy mode is profitable. Now, what you want to be careful with is, and we're almost there. The ROI has come up a little bit now, where it's a little better. But when we get a little bit lower, so say 20, 25, or lower in terms of the ROI, then it gets a little more risky, because if the price of Plasm does drop in that amount of time, then there could be a scenario where you are not profitable, right? So the short answer is, as long as that number is green, that yes, it's profitable. But the lower that number goes, the more uncertainty there is, because you have a lot less buffer on the price. So if it was 70% ROI, then you'd have a lot more leeway on the price to still be in profit. So and again, you can do the math on your own. All of that, all the deposit stake, estimated earning, all that is real time, so you can run the numbers on your own. And the only other caveat is, with easy mode, you're actually selling Plasm. So that is also, it could be a detriment to you if you are worried about accumulating for the long run, because and that plays into L stake. I know we were going to talk about that. What you don't want to do is basically sell all your Plasm to cover the contribution fees, and then not have any Plasm to continue to have exposure in the ecosystem. So if you are relying on easy mode, I would consider waiting until XL stake is ready, which is basically the liquid staking version of Plasm, or wait for the price to come up a little bit more from here, and then you can do easy mode again. So hopefully that helps explain.
Yeah. We'll take another question here. Let's see. Marvin says, I will say at this point, it's getting harder to justify going back into Plasm with either easy mode or fresh capital at this point. I have 77 days stake coming out every day, and none of them are in the green. I've been going in with fresh capital. I've also noticed something. Does the stake cost move with the price of ETH, or is it static?
Yeah, so two things. I would be interested to see that the 77. So what you have to realize is everybody's stake is negative, right? So Ryan, go. Maybe that's a good thing to show real quick. If you go to your position, what you have to understand is, um, everybody starts at a negative ROI because the whole thing is that you're earning more plasm to make up the ROI, right? That's how you actually make money. So yeah, Ryan is down. Right now it says minus 72 percent. But a week ago, and again, I don't have to look at the video, but that was like minus 77%,
So
right?
yeah, so
So
2 weeks
yeah,
ago when I staked, it was at minus 78%.
yeah. So you can see over the last few weeks that that ROI number has gone down and down and down. And again, that's only 2 weeks into 77 days. So you have to let your stake mature to actually see the ROI that you're getting. So again, we're at a point now where unless you just got a little unlucky, I'd say most of the stakes have been at least break even, and most of them have been in profit. So yeah, but that being said, to answer the other part of that question, what determines that is the ETH ratio. So if you go to the Plasm, I'm sorry, the E share ratio. If you go to the Plasm chart, Ryan, we can. I don't know if you have that up. Yeah. So yeah. All right. And go to yep. There you go. Perfect. All right. So as you can see, the chart looks terrible, right? Well, that's because again, eShare or Plasm against eShare has been going down. So what determines the actual cost is um, this ratio. And so what we want to have happen now, and it will as the buy and burn continues to go, and you will see that as this price goes up on this chart, meaning Plasm is gaining on eShare, that will reduce the contribution costs and make it even more profitable in terms of the ROI for everybody that's in. So again, I would just keep an eye on that chart that Ryan just showed, and you can time your contributions costs around that to get a better entry. But overall, again, the buy and burn is what really affects that. So if people just stop selling Plasm, or that's why L stake or XL stake is so powerful because that gives something. It gives people something to do with their liquid Plasm and earn on it. That will really help the selling pressure, and the price could go up dramatically from that alone, which again kicks off uh, lower contribution costs, more profitable ROI. I mean, there's a bunch of benefits to all that. So
Yeah, for sure. And then I just want to, preface this as well when I show in my portfolio. I come here once a week if anybody asks any questions, because I know I'm not, I got like 2 more months in this thing, so I could care less what it's doing. I don't look at this ROI. I don't care if I'm a little bit negative on this, because I know that I'm going to end up with about 3 times or 4 times more Plasm when I started, and my shares go up. That's all I care about. I do not care about the dollar value right now, because I've already told you I'm in for 5 cycles before I take 1 cent out. Okay? This is a long-term game, ladies and gentlemen. This is get rich slow. So get that through your skulls, okay? This is not something you're going to come in for 77 days and be like, oh, I'm mooned, I can retire. Those days are done, all right? I don't want to yell, I don't want to preach this, but guys, have some patience, please. It is the long game. If you can't play the long game, go get wrecked somewhere else, all right? I'm just going to drop it right there because it gets me kind of fired up when people are like, I'm not in profit. Oh my God, 77 days. It's just like, some of that stuff drives me crazy. So I'm sorry to yell, AJ. I don't want to yell at you either. So
yeah, yeah, right. No, man, I love it. We're passionate, and that's what it boils down to. It's not that we're angry at anybody, but yeah, and again, just to kind of wrap that up, the other thing Marvin says he's on a few of them he's not in profit in. Again, maybe you just got really unlucky. Maybe at that particular time, eShare was higher in value and had a bit of a spike. Or maybe I don't know. Did you do all 77 days? That's another factor. You have to have the longer pays better, right? So you have to max out the time frame as well. And so yeah, all 77 days. Okay. Yeah, again, Marvin, hopefully man it'll turn around. But to Ryan's point, what's the other side of the coin, right, Ryan? So the other side of the coin is you would have just taken your 20 grand, Ryan, and bought Plasm on the market, right? Well, I can almost guarantee that 20 grand of buying pressure on Plasm, number one, you're pushing the price up against yourself, right? Meaning you're getting less and less tokens the more that you buy. And if you did it all in one shot, you would get absolutely killed in price impact and slippage. So at the end of the day, that 20 grand may only be able to buy 500,000 Plasm. And here, after your 77 days, now you have, 600,000 Plasm. Again, I'm just putting numbers, round numbers to that. But the whole point is that earning your Plasm is probably more cost effective than buying it outright. And that is again the way the system's designed. And why it matters is that all those fees, that 20K or 12K that Ryan put in, that bought bonds. And now Ryan's contribution to the system, we did the math, Ryan, but it's like $8 a day is now from your position
Yeah,
alone
something like that.
is buying that position alone is now buying and burning Plasm every day. And in a year from now, that is way more money than what would have just happened if that 12 grand would have been spent on market buying and depleting the treasury. And I just did a post before we jumped on stream today. A little lucky the Irish. Happy St. Patrick's Day to everybody. But we're over 500K now in the treasury. I mean, that number even a few weeks ago was almost at 400K. So we're up like about 100 or 125 grand in the treasury because again we have exposure to the underlying assets, right? So when ETH pumps and the bond price pumps, that also pumps the value in the treasury, and that matters because now even as it stands, the collateralized value of Plasm, which means if you took that 525K worth of real assets that could be sold at any moment, that not just some made up number, that puts the price of Plasm at about 6 cents or a little bit more even. So we're still really undervalued in terms of just the math of the platform. And there's a ton of other videos out there, but I would love it if ETH or Bitcoin or any of the blue chips, what benevolent whale is buying and burning ETH or Bitcoin? The answer
Yeah,
is none, right, Ryan? So
right.
again, you can't argue with the numbers. It's been over 100 grand. And if you go to stats page and go to the very bottom, you can see over 100 grand has been bought and burnt within what is it, 170 days. So yeah, go all the way to the bottom, you'll see it
Oh
there.
yeah,
But yeah, 111. Yeah,
yeah. 224 ETH in the balance. That's insane.
yeah, for sure.
Daily yield $708. So that is pretty awesome. And Marvin, another thing, you should be more concerned about if you're a long-term holder of Plasm. I don't know why you're concerned about being red after the 77 days. I mean, maybe you're going to sell or whatever, but did you 3x or almost 4x your tokens in those 77 days? That's the only thing I'm concerned about. So just keep that in the back of your head too before you get frustrated. Because
Yeah,
shares, ownership, and token, that is the important part. Okay. else here? We need to talk about what was I going to say again? I was going to say something about, I can't remember if it was my portfolio or maybe we already covered that. Did you have anything else to touch on for Plasm?
Yeah,
AJ?
no, yeah, I think that was a great overview of Plasm. Hopefully that helps people. I mean, obviously, we say price doesn't matter. Obviously, price matters, but price only matters when you go to sell, right? So that's what Ryan, I think, was just saying with Marvin. It's like what we want to have happen is we want to accumulate as much Plasm tokens as we can over the first few cycles, and then we worry about price, right? And by
Right.
then, the buy and burn could be doing, 2-3 grand a day. Like I said, we're doing 700 a day, but that's with the APR being, what, like 50. So,
Yeah.
3 weeks ago, the APR was 140. On almost 550 grand. That would have been like right then and there would have been 2 grand a
Right.
day almost. So it scales up with the success of what we're doing. So just keep all that in mind for sure.
Exactly. Okay. Yeah. So maybe we should move on. In the meantime, guys, while we're moving on, I'm going to give this shirt away. Bernard Bond's shirt. Okay. On the back of it, it's got the QR code for if someone scans the back of your shirt when you're wearing it, it's going to bring them right to the Bernard Bond site. Scott Tixon makes them. He is one winner in Telegram or Plasm, and he is Best Blinds Utah here on YouTube. So I'm going to give that away. I will ship it to you just like I did with Marvin, but you have to give me the right address. All right. So I'm going to pick a number between 0 and 100, and I want you guys to guess. One guess per person. Marvin, you cannot win again. So just a heads up. So number 0 to 100. Pick a number only once, please. Go ahead, and then we'll hop right into FortuneFi. Obviously, this thing has been crazy. I got to pick my number here first. There we go. All right. I got my number. Now we'll let people guess. $11,443, AJ. I'm excited about that. Almost 5 ETH. Obviously, the price of the price of ETH makes a big difference. 226 tickets sold already. It's been great, and I think it's going to be taking off. I mean, what are your thoughts, AJ?
Yeah, no doubt, Ryan. Again, one of our other incredibly promising builds, right? So yeah, I couldn't agree more. We see that the jackpot growing just from the appreciation of bonds and ETH. That doesn't even include the new tickets feeding the system. And just imagine again, the theme of tonight has been the scaling, right? So if that's 100, say we had $100,000 in the jackpot, that would be literally 10 grand that we would have seen increase in the protocol, just from ETH going up. So that the upside potential is just massive, and you're earning ETH, right? So when we liquidate the bonds, if you hit the jackpot, that the bonds get liquidated, you get sent ETH to your wallet, whether ETH is $1 or $1 million. You're getting actual ETH, right? It's just insane. So that is also incredibly powerful, for the future of FortuneFi. But yeah, I couldn't be more happy again as jackpots grow. I think people will be excited again. A little bit of alpha. We're brainstorming on other ways to help subsidize the jackpot through maybe additional games or additional yield. We're always brainstorming on that. And Ryan, we did have a little bit of alpha or news, I guess, not necessarily alpha. We have blacklisted our own wallets from the prize pool, right? So yeah, go ahead. Yeah.
So me and AJ were the top spenders. I was number 1, and I think he was 2 or 3 last week. I can't remember. And I thought to myself, I give away so many tickets during the week that I don't want the free tickets. I want you guys to win. Okay. So I talked to AJ. I'm like, AJ, I said, because he gives away tickets to his people. I was like, I don't think our wallet should be able to win the 10 free tickets. Because first place gets 10 free tickets, guys. Second place gets 7. third place gets 5, and 4th through 10th gets 2. Okay, every single week. And it's not fair for me buying all these tickets for people, and then I end up with 10 free ones every single week because I'm the top spender. So me and AJ decided that both of our wallets, you'll see, because we were up here already, they're gone. So we had Scott, the main man from Build the Tech, BTT, who does all our builds. He built Plasm, he built FortuneFi, things of that nature. He took our wallets off, so we are not in the top spenders anymore. So this is up for grabs. Whoever's a big spender, it's not me or AJ, okay? And we don't have hidden wallets, whatever. We don't care about the free tickets, guys. Also, in the Whale Club, be paying attention to this, guys, okay? Next Friday, the 27th, where's my calendar? Yes, is the Whale Pot. It's going to be over $530. One person is going to win it, all right? It's Chainlink VRF 2.5 is going to pick one wallet. And if you come back here to next Thursday or next Friday, which is like 26th, 27th, and there's only 5-6 people in here, I'd be putting $100 in, because that's the minimum to be in the Whale Pot, because you're gonna have a 1 in 5 chance of 5xing your money. That's a 20% chance. That's pretty damn good odds. So when it comes close, guys, be paying attention to the leaderboard and into this Whale Club board before next Friday, because it's 100. You have to spend 100 a month. That's why I buy 13 a week. Okay, that's 13 times 4 is 54. 54 times 2 is 104. Whatever the math is, I spend my 100 to get in this. Also, this is AJ's wallet, and this is my wallet. If we end up getting these 2 wallets get drawn for the Whale Pot, we're instantly throwing it back in to the Whale Pot. All right, to fund it. All right, we're not going to take the $500 or whatever the Whale Pot is, because we don't think it's fair, because we're going to have more chances because we buy more tickets. So you're welcome. Just saying, our wallets are blacklisted from any prizes, anything like that. I think it's important to me, and that's why I brought up to AJ, and we got a hold of Scott, said, Scott, can you please do this for us? I just think it's the right thing, being I buy so many tickets for people. If you're not in the Telegram group, please join. Last Friday night, I gave away, like, I don't know what it was, 30 tickets or whatever within the last hour right before the thing. I mean, some of it's a little bit, some of the giveaways are infused by maybe a little bit too much scotch or something, but, things like that happen. So with that said, FortuneFi has been great. We wanted to give you that little alpha. What else do we need to talk about, AJ?
Yeah, no doubt, Ryan. So again, I think you covered that really well. You are gonna have to just take our word on what Ryan said about the whale pot. Again, we on the contract level, we can't blacklist winners, right? Because that wouldn't be fair. So again, we don't we're still on there, but yeah, if either of us win, it's going right back in. And then yeah, to Ryan's point with the free tickets, that's a promo contract basically. So we're able to just remove ourselves from that. And again, there's so much, you could literally double or triple your odds just from winning free tickets on the weekly pots too. So
Yes.
remember, the free tickets, they don't allow you to win additional free tickets, but they do allow you to be eligible for not only the jackpot, but also for the weekly. So you can dramatically increase your odds by winning, some of these side pots, and you can also save your winning tickets. Right? That's another thing. If you win some tickets, you don't necessarily have to spend the free tickets right away either. So those are some other cool things that you can do with your winnings, and they show up right in your wallet. There's a pop-up window that shows what you won every week. Super easy to understand, and super easy to follow. And yeah, hopefully that the leaderboard just continues to get people excited. And now that we have all these leaderboards in place, as the protocol grows, we can also give away cash too, right? So that's another thing to look forward to in the future, for the longest streaks, the biggest winners, the top spenders, all these things, top refers, obviously. We can incentivize all of you through being involved. So, and maybe
Right.
that
Yeah.
the biggest incentivization is the streak, right, Ryan? So maybe touch on that real quick. That's the only thing
Yeah.
we
The
didn't go
streak,
over.
guys, this is where the magic happens, the streak. And you can see right here, where's my streak at? Jackpot.
Oh yeah, go back to the jackpot. Yeah, there you
Yeah.
go.
So this is where the magic happens. I'm in for 77 consecutive weeks. You only need to buy one ticket a week to be in the streaks, guys, because at 52 weeks straight that you've bought one ticket, on the 53rd week, the smart contract knows, hey, this person's bought every single week at least one ticket. Okay, free tickets don't count, guys. Airdrop tickets don't count. You have to purchase one for $2. If you can't afford the $2, shouldn't be playing the game. When the smart contract knows that every single week that you buy after the 52 weeks that you've bought one ticket, it's BOGO. It's buy one, get one. So every week I buy 13 to be in the whale pot, okay? Because it's 26 week, 104 a month to be in the whale pot. I'm going to get 26 tickets for the price of 13. So that increases my chances of winning the weekly side pots, obviously the jackpot, which is going to be huge a year from now. Guys, wouldn't surprise me if it's 100 grand, 200-300 grand. You never know what's going to happen in crypto, but at least one ticket a week to get those streaks up, because you never know. People, when this thing hits 100 grand, there's going to be people flocking in, buying 10, 20, 30, 40, 50 tickets. And imagine what 50 tickets will do. You buy 50, you're in the streak. Say you've only bought one for a year. You buy 50 next year at this time, you're getting 100 tickets, okay? So the streaks is very important. It's one ticket. It doesn't need to be 13, but I do 13 because I want to be in this whale pot, which is right here, $522. So it should be close to $530, $540 next Friday night, and it's going to draw one winner. You can see, and it'll tell you if you're qualified or not. Right down here, it says the weekly side pot. If it ended right now, 10 people, 10 random winners are going to pick. They're going to get $13 instantly airdropped into their wallet, for buying one $2 ticket. So, your odds are pretty decent. And it says the weekly side pot, I have a 1 in 14 chance of winning. That's not terrible, in my opinion. So yeah, it's the best thing about it, guys, all this stuff is on chain as well, and you can view it on DBank. You know where the money's at. Obviously, the TVL is about 16,000. If someone wins that side pot, you're going to get that, or that's not the side pot, the main jackpot. You're going to get that amount minus 10% because we're going to liquidate the bonds. But then whatever that is, we're going to have about $3,000, $3,000 or $4,000 to start off the next pot. Okay, because it's 70% of the pot is that number is this number right here. Okay, so we don't start from zero again. It goes, so it'll be about $4,000 or $5,000, which will start in there. All right, and you can click transactions, and you can see when people mint tickets right there, and you can see when it buys a Bernard bond. Obviously, guys, this is how the payouts are. This is how we, juice the pots from the Bernard bonds. We've got 373 of those suckers working for us, making $22 a day. Zero Ponzi-nomics, ladies and gentlemen. Okay. The pots are getting juiced every day, and here's where the money goes: 50% into the main, 35% into the weekly. The devs gets 10%, and the monthly whale pot gets 5% of it. That's how this thing works, and it is all 100% transparent. If you are a multi-level marketer or whatever, you can see I've got 36 referrals. I get 10% commission, so every ticket sold underneath me, I get 20 cents. Not too shabby. When people start buying 50 tickets a week, that number is going to be huge, and I'm just going to give away more in the Telegram group. I don't care if this number is $2,000. I'm going to give more than that away. It doesn't matter to me. I'm not here for referrals. I'm here because this thing is awesome, and I want a chance at the main jackpot. There's your link. Copy and paste it. Send it to your friends, guys. I mean, that's FortuneFi, and it's fun. It's a game. You're not supposed to say a jackpot or a lottery. I don't care. You guys know I don't follow the rules anyway. This is what it is, okay? It's the Powerball. It's the Mega Millions of crypto. And I like playing it because I don't have to leave my house. I can do it right from my office, right from my couch, watching TV, and I'm not going to a gas station and buying other stuff I don't need. So that's just me. Just remember the streaks, guys. It's only $2 a ticket. Hook your links in the description. Hook your wallet up. You can pay with ETH or USDC on base. You can pick your own numbers. Okay, go down here. I don't have patience for that. I just do a quick pick a couple times, and boom, buy a ticket for $2. Bam, you're in. It's that easy. Okay. You want to be in the whale pot? Just remember, it's $100 minimum for the month. You can buy them 13 a week like I do, or some people wait. I don't know why they wait till the last, right before the thing. Why not have a chance at a free ticket every single night of the week of the month? And you're buying Bernard bonds, juicing the jackpot for everybody else and yourself if you buy them earlier. Okay, so, but people be people. It doesn't matter. You guys do you, whatever you want to do. But those are the facts. Anything else I didn't touch on, AJ?
Yeah, no, I think that was it, Ryan. So I know we're running a little long tonight. I know you still have to give away your shirt, right? So yeah, don't forget that.
We have 20 people watching and 3 people guessed the numbers. Apparently they don't like free shirts. But I'm glad to say, Muttley, you're the closest. My number was 43. Okay, right there, it's 43. I don't know if you can see it, 43. So Muttley, DM me your address. Maybe they don't want to be doxxed, and I get it, guys. I don't care. I do not care where you live. I'm not going to come visit you. Maybe if I was invited, maybe I would if there's fishing. But whatever. I'm not going to share your information. It doesn't matter. So just remember for next time, I don't care where you live. I don't keep. If someone sends me their address, I delete it when I send the address because I don't want the headaches and stuff like that. So, but Muttley, DM me your address. I'm sending you a shirt. Send me your address, name, and the size shirt, what you want. It will be in the mail tomorrow, my friend. Anything else, AJ, before we close it up?
Yep. No, I think that was it, Ryan. Again, those were all the big things for the week. We did one real quick shout out. We did do an interview over the weekend with a guy that you guys might not have heard of. Obviously, we talk about Scott and Shane with BCT Build the Tech, but I interviewed one of the owner of Build the Tech, Brandon. So I know, Ryan, I think you were in the comments on Sunday. But yeah, check that out. That's on our EMP channel. It was a great discussion of what Build the Tech is doing. Those that want to continue to build in the space, even utilizing bonds, Bernard bonds, everything that we're building, it'd be a great way to integrate all that. And there may be a little bit of alpha coming over the next few weeks too. So keep an eye out for LStake launching, some other surprise projects, and over the next few months, we're gonna have even more amazing protocols feeding the mothership, Ryan. So yeah, man,
Yes.
appreciate you. Thank you for always having me on our DeFi date night on Tuesdays.
Yes. No worry. I look forward to it. Love talking about crypto. Like you said, I'm passionate about it, and I know you are too. It is the future. When you guys think I'm nuts, but when all the banks go to zero, me and AJ are going to be the ones that are going to be laughing. So with that said, guys, that's it. Bernard Bonds, DexFi, Plasm, FortuneFi, it's all here, guys, under the EMP umbrella. 100% doxed owners, CEOs, founders, and he's in front of the camera every Tuesday and Thursday night with me and on his own with the lovely LA. And we talk about things just like tonight. I love the questions. I even love the FUD, and I love proving people wrong. Had to get that out there. I think I'm going to be the winner in Plasm in November. I hope so. Maybe I'll send, like I already told Cool Sheet, I'm going to send him something. But yeah, please please subscribe if you're not. Like I said, doxed owners, doxed wallets. That's what crypto needs. That's what crypto wants. That's what you should demand. That's what we do here at Under the EMP umbrella. With that said, ladies and gentlemen, I hope everybody has a great rest of their Tuesday evening, and we'll see you in the next one.